Hello, my friends. I want you to stop what you are doing right now and listen to me. We need to talk about your money, your security, and a digital trend that might be tempting you when times get tight. Every single day, I hear from people just like you, people who have worked hard their entire lives, people who are at the doorstep of retirement or are already living on their fixed monthly income. And let's be honest with each other. The cost of living is rising, prices at the grocery store are stubborn, and it feels like your money just doesn't stretch the way it used to. When you find yourself in a situation where your monthly check hasn't arrived yet, but a bill has, it is completely natural to feel a sense of fear. It's a pit in your stomach. You ask yourself, how am I going to bridge this gap without putting myself into deep financial danger? That fear is exactly what drives people to look for quick solutions online. And lately, a lot of you have been seeing ads or hearing about an app called Credit Genie. It sounds like a dream come true, doesn't it? A genie that grants your financial wishes, offering you a cash boost or a quick advance of $50, $100, or maybe $150, all with a promise of 0% interest and no hard credit checks. You see that online and you think, Susie, this is the answer to my prayers. It's a safe, modern way to handle an emergency tutorial right from my smartphone. But I am here today to stand as your financial guardian, and I need to tell you to stop, take a deep breath, and look past the shiny marketing. Because what looks like a harmless financial helper on the surface can actually turn into a compounding trap for your retirement nest egg. Let's do a real, unfiltered tutorial of how this app actually functions for someone in your shoes, and why it might be costing you far more than you realize. The app positions itself as an earned wage access tool. For a worker with a traditional weekly paycheck, it looks at their banking history and lets them advance a tiny bit of cash before payday. But what happens if you're a retiree? Your income doesn't come from a clock-in, clock-out job. Your income comes from Social Security, a pension, or an annual distribution from your retirement accounts. To even see if you qualify for a single dime from Credit Genie, the app requires you to link your primary checking account. And here is the first major roadblock that trips up almost everyone. If you share a joint bank account with your spouse, which nearly half of married couples in America do, this app will completely lock you out. They require the bank account to be in your name only. But let's say you have an individual account and you link it. What happens next? They charge you a mandatory subscription fee just to manage your account and determine your eligibility. We are talking about a fee around $5 a month, or sometimes over $3 biweekly. Think about that. Before you even get any money, you're already paying a fee. Then, let's say you're approved for a $100 advance to cover a prescription or a minor utility bill. They tell you there is 0% interest. And technically, that is true. There is no traditional interest rate. But how do they make their money? They do it through what I call the fee sneak attack. If you need that money right away to avoid a late fee or an emergency, they will charge you an express delivery fee. That instant transfer fee can range anywhere from $6 to $13, depending on the size of your advance. Let's do some very basic math together, because numbers never lie and people do. If you request a small advance of $40 and you pay a $10 membership fee plus a fast transfer fee, you are paying a massive percentage of that money just to access it for a few days or weeks. If you calculate what that fee structure looks like as an annualized percentage rate, you are not looking at 0%. You are looking at an effective rate that can climb into the hundreds or even thousands of percent. That is not a financial blessing, my friends. That is a financial predator in a very polite digital disguise. When the time comes to pay it back, the app automatically debits your bank account on your next deposit date. Now, the app claims it checks your balance first so it won't trigger an overdraft fee, which is nice. If you don't have the funds, they might split the payment or delay it. But here is the real psychological danger for a retiree. It creates a vicious cycle of dependency. If you borrow $100 this month to cover a gap, that means your next Social Security check is going to be short exactly $100 plus the fees you paid. So, what happens next month? You're short again. And you go right back to the app, clicking that button, paying that subscription, paying that instant transfer fee, just to get back to even. You become trapped in a digital loop, letting a smartphone app take a bite out of your fixed income month after month after month. You cannot afford to let your hard-earned retirement dollars leak away into subscriptions and express fees. Every single dollar matters when you are on a fixed budget. So, what is the actionable takeaway here? What should you do instead when that fear creeps in and you need a bridge? First, if you are struggling with recurring unsecured debt or bills, you do not need an app to manage it for you. You need to communicate. You have the power to contact your utility providers, your medical providers, or your credit card companies directly. Almost all of them have hardship programs, altered payment schedules, or grace periods specifically designed for seniors and retirees. All you have to do is ask. Second, we must build a true protective wall around your peace of mind. If you do not have a small emergency cash fund sitting in a traditional, safe, high-yield savings account, that needs to be your number one priority. Even if you can only save $10 or $20 a month, build that cushion so you never have to grant a digital app access to your personal checking account just to survive until your next deposit. Do not look for genies or magic tricks to fix a temporary budget squeeze. Your financial security is built on clarity, control, and keeping your money where it belongs, in your hands, working for your future. Stay safe, stay strong, and protect your hard-earned retirement.